Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and I hope you had a great 4th of July celebration. The markets were closed on Tuesday. We had a shortened trading week, and the days that followed Tuesday were very, very interesting. Let's take a look at the Dow Jones Industrial Average ETF here in the DIA. This is the ETF for the Dow, and you can see that we are coming ever so close to hitting my downside target there at 334.76. And today we closed with an inverted hammer. Now, for those of you who are following along with my technical analysis, you'll know that an inverted hammer, which has a long shadow above that small little body, that is bullish. Now, if that candle were to be found at the end of an upward leg and closer to resistance, if it looks something like that, that would have been a shooting star, and that would be bearish. But when you put it at the end of a bottom down leg, that's bullish. Now, in addition to that, we have a gap above the market, and we do have a drop in volume on the way down. So that tells us that the sellers are becoming less motivated. And while we have a conflict here between the stochastic and the CCI is hinging a little bit. I do think that we're going to rally a little bit and possibly all the way up to the gap. I don't know that for sure. I'm going to put a big question mark on that. But ultimately, I think we're going to come down here and hit that target price. I'll adjust that later to be exactly at that 334.76. So for Monday and Tuesday, I think we'll see a little bit of an up move. Stay tuned when I talk more about the VIX and the reasons why I think that could happen. But for the short term, I think we'll see a little rally, fill the gap, and then come right back down to hit my target. So in other words, we are stuck right in the middle of a trading range right here. Now, if we start breaking out below the bottom here, that could be interpreted as an M-top, which could bring us all the way back down here. But that's still too early to call on the M-top. We have to have a breakout below the bottom of the middle part of that M. So that's DIA. If we look at IWM, this is the Russell 2000 ETF. We gapped down yesterday, and look at that hammer candle. That's bullish. And today we made a move up to fill the gap. Now, this is different than what we're seeing in the diamonds. The diamonds, I'm expecting to see exactly this happen and then back down after the gap fills. So for IWM, I'm keeping that downside target in place right there. Let me get that little data box to pop up at 178.66. Again, another one where we're stuck in this sideways trading channel or trading range. So again, that's IWM. We'll look at the Qs. This is basically representing the NASDAQ market. A little bit of a difference here. This is more of a shooting star because it's closer to an upward leg. Again, confusing, isn't it? We have mixed signals here. I did this two-parter where I thought the Qs would go up back here at the end of June, and now we're waiting for the pullback here. The stochastic is heading lower. The CCI is hinging up. Again, mixed signals. The good news for the bears is that we have a drop in volume here, and I think that we have a gap way down here that ultimately can fill. That too, what we're looking at here is another possible M-top with the breakout below the bottom of that M could bring us down to a level closer to right around 350 for the Qs. Now, again, that downside target is still in place for QQQ. That's 346.73. Moving on to SPY, similar pattern. We had a gap fill today after a gap down yesterday. Another possible M-top forming. I think that the S&P is going to go up just a little bit here. Let me back out so we get the big picture here. I think we're going to go up just a little bit more, and then I think we're going to come right back down, just like that. Ultimately, I'm keeping the longer-term downside target down where I've had it. That is not changing. We'll have to see again if that M-top starts to break out below the M, then that target price down there will most likely hit. And that target, again, to reiterate each and every week here, is 422.26. And why do I think the SPY could go up a little bit more? Well, normally on that gap fill, I would go lower, but it's in the VIX that tells me we could go just a little bit higher. Now, here's some guarantees for you. Over the years, I've told people that I give guarantees on the VIX with regard to gaps filling, and that has not changed. We gapped up 2 days in a row here yesterday with this big shooting star. Today, we have this bearish engulfing. Now, we did fill the gap that was set yesterday, but we still have an open gap down below. So here's my guarantee. I guarantee that that gap will fill. After that, no more guarantees, but there is a good chance that we're going to go back up. Now, I'm going to extend that up to my 1720 target, which is what we had here. We missed that just by, 10 cents? We missed that by, 1720 is my target. We missed it by 12 cents yesterday, but I think we're going to go right back up from there. So I'll adjust this to make that look a little bit neater and do it in pretty much the same angle that we had back here. Let me just do this in front of you so you can see how I'm adjusting this. 1720 is going to be my target there. So 1720, and that keeps it in place. Again, fat fingers, I got to make sure I get the numbers in there twice. Okay, and there it is, 1720. So now I can get rid of this instead of having all those lines on the chart. So that is for the VIX. Now, for you silver lovers out there, let me comment on that. We have a lot of people that like the silver. We have a pivot point in silver, and I have my target back here on silver at 21.47. Came close to seeing that on Wednesday, but I do believe we're going to make a move to hit that target at 21.47, mainly because if you look down below, the CCI is crossing above the zero line. Again, for those of you who follow and know, I repeat, and that repetition is the best teacher. When that zero line crosses, we generally see 2 to 4 more days of momentum in the direction of the cross. Can't tell you how high that will go, but I can tell you there's a high probability that the prices will rally and eventually move up towards filling that gap. So that target is still in place for silver. And the other reason why I'm more bullish on silver is because if you look at what's happening to the dollar, you can see that the 20-period moving average for the dollar is starting to slope down, and we have a sell signal cross on the stochastic, and we have a cross below the momentum line on the CCI. So for silver, that is bullish because for the most part, the dollar and silver are inversely related. Now, let's go to the geopolitical news. U.S. factory orders are in a massive downward trend. You can see that right there. And so while many are believing that we're going to have a soft landing, I keep saying we're not even going to be able to avoid a crash landing at this point. They say here that this is the first time since October 2020 that we've had a decline. But if you look at what's happening with the manufacturers' new orders here, year over year, which is this blue line, that is a significant downward trend that is unmatched. And I'm telling you, keep your eye on the data. Keep your eye on the numbers. Do not look at the financial programs or listen to what the institutions are telling you. You have to understand that these are the real numbers. While the unemployment numbers came out and hit the estimates, this is the real story. 30% of our entire population is not participating in the labor force. Right? It's called the job participation rate. This is a dynamic number. When you go to the website, you can see the live broadcast, how this number keeps growing very rapidly. But if you look at what the Bureau of Labor Statistics is telling us, we have over 100 million people not participating in the labor force. Do simple math. That's 30% of our entire population. Those are the real numbers. Now, remember what I was saying about silver. I've said this over and over again, that long term I accumulate silver and I parlay it to continue to build my position. This is a story that continues to get headlines where solar energy production could actually require most of the global silver reserves by 2050. Now, I don't know where I'm going to be in 2050, but I know most certainly that my family members will have a whole bunch of silver to benefit from as we continue to build our family's future. I'm not telling you that this is the greatest time to buy silver. I'm just telling you that there is going to be demand. Production is going to eat it up. It's considered to be a currency. We don't know what's going to happen with the dollar. We don't know what's happening with inflation just yet. The Fed doesn't even know that. But this is an interesting story and a good read. Now, for those who are in the transportation stocks, or if you're holding UPS or FedEx or even Amazon, this happened on Wednesday right around 4 a.m. UPS walked away from the bargaining table with the union members and no deal was made. So this is a story that's unfolding. We'll have to see how that's going to affect individual stocks, especially the transportation stocks, but I thought it was worth mentioning. Now, this is extremely interesting. Watch what I've done here. If you look at the commercial mortgage-based securities, which is CMBS holders, you can see that the rate of delinquency is going vertical. You see that? That's this year alone going vertical. The delinquencies are high. And then when you take that data and cross-reference it to bankruptcies, you can see that the bankruptcies are also on the rise with an almost vertical move here. What I did is I took the original delinquency chart and I superimposed it or overlaid it on top of the bankruptcies, and I can see a direct correlation in that the delinquencies are leading the bankruptcies. You see, so while the delinquencies are still on the rise, so are the bankruptcies on the rise. That does not tell us things are getting better for the economy. In fact, it's the opposite, telling us things are getting worse. Now, I came across a bit of data that I found to be extremely interesting. Now, let me pre-frame this. A good friend of mine, whose name is Ryan, owns a pawn shop in the Orlando area, and he tells me that he is becoming overwhelmed with people coming in, hawking their jewelry. But the way it works, you give them your jewelry or an item, and if they decide to exchange that, they will give you a short-term loan at high interest rates until you pay it back. If you don't come back and pay off the loan, they keep the jewelry or they keep your property. And this is coming out as an interesting point that the words pawn shop near me in search engines are spiking to record highs. Isn't that interesting? People are looking for pawn shops. I'll tell you right now, they're not looking for pawn shops to go shopping. They're looking for pawn shops to go find ways to go pay their bills. That's exactly what's happening, and Ryan can attest to that. Now, I'm not drawing any conclusions from this because I don't know enough about how the data is being collected, but I take it that it's accurate. Can't confirm or cross-reference this in any way, but I found that to be extremely interesting. How many times have you heard me say, keep your eye on China, keep your eye on China, keep your eye on China? Well, I stopped saying that for a while, but I'm not going to tell you not to keep your eye on China. Keep your eyes on China. What's happening is China has now weaponized the minerals markets. In fact, this is an article that came out through the ChinaDaily.com, and you can see that they're holding back on the export of key minerals that are needed for the production of chips. And so what does that mean? Well, if they've weaponized it, then they're going to use it. Because here's coming from the Associated Press, headline reads, China accuses U.S. of turning Taiwan into a powder keg with arms sales. Beijing is playing the chess game, and the U.S. is losing this chess match for sure. Keep your eyes on YouTube. Keep your eyes on the chart. Stay connected to me. We're going to have some exciting changes coming up by the end of this month. Stay tuned. I will be making some announcements. And until then, I'll talk to you members who are subscribed to my trade alerts. I'll talk to you on Monday. We have an hour and a half long to make up for the holiday break that we took. this week, and then next week I have another hour and a half session on Monday, and then all the sessions in between on Wednesday, Thursday, and then again we'll have the market report come out next Friday. Some people are telling me they couldn't find this report last week. I really don't know what the problem is, but I'm going to go throughout the social media channels to make sure that people stay in touch with me in the event that they lose connection with my reports. I'll be posting them to the other social media channels so you get this and you get it in a timely fashion. So you have a great week and a weekend, and I'll talk to you later. So long.